Hi, everyone, and thank you for joining us on today's webinar. It's great to see so many of you signed up. I know this is right after a holiday week. People are probably just getting caught up um, after maybe a long 3-day weekend, maybe even more. So happy to have you joining us. This will be a pretty brief webinar. I think we might have promoted it for an hour. We should be done probably within about 30 minutes. And in the meantime, as people are logging on, just want to introduce myself and talk a little bit about what we'll be talking about today. And also, I hope you all were able to get your Uber Eats, and I hope you're enjoying a nice little lunch, maybe at your desk, and a little information about what the retro groups are in Washington State. So before we get started, I'll just introduce myself. My name is Heidi Posada, and I am the member recruitment manager here at 501c Agencies Trust. 501c Agencies Trust has been around since about 1982, so well over 40 years. And we have been running this retro group that we're specifically talking about for about 35 years. So a little bit about 501c services. Our primary program is an unemployment program that about 200 Washington state nonprofits use. We help nonprofits reimburse for their unemployment. So you may be familiar with us through that. But also today I'm going to be talking about another program that is Washington specific, which is our retro group. A little bit about myself. I come from a nonprofit background. I started my professional career with the YMCA of Silicon Valley as a youth sports director, and moved up through the ranks there, and then eventually went to the American Cancer Society, where I ran galas and ran operations for the Central Coast here in California. And that's all a bit of my past. I've been here with 501c services for over 15 years now, helping nonprofits both with their workers' comp as well as their unemployment. Other pictures here, that beautiful dog is my dog Hunter, and I work from home sometimes, so I like to introduce him just in case he is fiercely barking in the background. We're not home today, but that's Hunter. He's my sidekick on many road trips even. I brought him up, I think in 2022 up to Spokane. So we did some visits with nonprofits up in Spokane, and I brought him along with me. And then just also the team that's some of the team here at 501. 501 is an employee-owned company, and all the people in this picture, this was a long time ago, and we're all still here. So something to say if you do work with us, engage with us in either our unemployment program or our retro program, um, uh, you'll get to know us, get to know the customer service people. So again, today I'm going to stop talking about the unemployment side and focus on retro and workers' comp. And what we're going to talk about today is, first of all, what is retro? Then important factors when choosing a retro program. And specifically, I'll talk about the 501c Agencies Trust Retro Group and how to qualify. And then finally, what are your responsibilities? At first, a little bit about 501c services. Again, I already talked about this a little while earlier, but we were established in 1982 by nonprofit executives. And shortly after we started here in California, we launched another trust up in the focused on Washington and Oregon. And probably about 20 years ago, we merged those two trusts, maybe even 25 years ago now. And because of all the work we were doing in Washington with our unemployment program, we were developing relationships, and we're able to launch in 1991 the Washington the 501c Agencies Trust Retro Group, which is the state's only nonprofit exclusive retro group. So what is retro and why are we running it? So retro is, so first of all, just a little bit of history about Washington State and how you're running workers' comp. Most of you are probably familiar that Washington State does not allow you to get your own workers' comp insurance. You do have to get it through the state. You're only one of 4 states that runs workers' comp like that. There are some agencies that self-fund their workers' comp. I think those are going to be your Amazons and your Boeings. For the most part, it is something that you do have to go through the state to avoid the tremendous risk that would come with managing it on your own. Um, so there is, though, even though the state is managing the workers' comp, you do have an option to save money if you're maintaining a healthy workplace. So as I'm sure you're aware, all employers in Washington are assessed a premium by the state of Washington. And retro does not change that. You continue to pay, you're going to still pay your quarterly amount. So if you determine that, this is something you want to pursue, it is important to understand that it's not changing how you fund your workers' comp. So what is it? If we're not changing how we fund it, what the heck is a retro group? So it is short for retrospective rating, and it is, even though you're still paying your premium, you're still paying into the state, it's the only way that you can get any refunds on what you pay. And so how it works is a retro group is a group of employers recognized by the state that can potentially receive refunds. So how it works, we right now have about, I think, 151 members in our retro group, 151 nonprofits participating. And just to use simple numbers, let's play like there's the 150 members in total have $1 million in premium. And say, for instance, in the retro year, we had $500,000 in claims. So we paid 500,000 more to LNI than we got back. So what LNI is going to do is reimburse us money. And since 1991, that reimbursement has totaled over $24 million. And where does that $24 million go? It goes back to our members. So like I said, right now it's 150 members, 150-ish members. And every year our members, or almost every year, our members get some sort of refund because of that gap in what they're paying to LNI and what the claims are paid out. So most people are like, it's kind of a no-brainer to be part of a retro group if you do qualify. But there's definitely things you want to consider when choosing a retro group. Again, retro groups, you can't just sign up for any retro group. They're usually identified by region or I know there's one chamber that runs their own retro group. So as long as you're a member of that chamber, you can qualify. Some are construction specific, some are auto specific. Our group is specific for nonprofits. So the first thing you have to determine is make sure, I think everybody on here, we made sure everybody here is a 501c3. So that's the first thing to see if you qualify for our group. The other things are to look at the performance of the entire group. And so what we do, we are very careful to monitor our group. Again, going back to that $1 million in premium, $500,000 in claims, you're going to get some of that refund back. So it's really important to have a group that focuses on controlling costs, minimizing claims. And because the refunds for the total group are based on the total group's performance. So specifically a little bit about our retro group. We were established in 1991. Again, we're Washington's only retro program specific for nonprofits. So as long as you are a 501c3, that's the first step in learning to qualify. And our retro year is October through September. So what that means is once you sign up for the retro year, you are in it for the entire year. Our year starts in October, so the deadline to register and be part of the group for the whole year is September 15th. So I know we're in the middle of summer. September 15th seems a little bit ways away, but this is actually an ideal time to start considering doing an evaluation to see if you qualify, to make sure that we have all of the underwriting completed, make sure you qualify for the program by that September 15th deadline. And I always like to say, so we've 150 members there in Washington State. I like to, be a little bit more specific, show you who some of the wide variety of nonprofits that are using us. I had I had the opportunity to go down and meet with Seattle Aquarium while they were signing up and they were building their great new expansions. So I haven't been back, but hopefully that's completed. But they're one of our newer members as part of the retro group. YW Spokane has been around for a long time. Most of these have been longtime retro members. And one thing I forgot to mention or neglected to mention at the beginning of this presentation is we will be emailing copies of this presentation to you shortly after this presentation, hopefully by the end of the day. And so I'll let you go ahead and read these testimonials at your leisure. But I do want to just point out that Pete, who's the CFO at United Way of Pierce County, that United Way has participated in our retro group for many years, and Pete has also participated on our board of trustees on and off again for probably over 20 to 30 years. So if you know Pete, he can always answer questions about our retro group. And also Alan Lesher, YMCA of the Inland Northwest. That YMCA has participated in our retro group for many years as well. And as you can see, since 2010, we did do a deep dive and look at their refunds over the years. And for them, since 2010, they've received over $100,000 in refunds. So, and that's literally $100,000 just for participating. There's no extra work for them to get those refunds. So part of the retro group, like I said, is good group management. So our goal is not only to keep that refund coming, keep the, keep the workplace safety low, or sorry, keep the workplace safety strong and the claims low. Not, and so we work with ICM. Some of you might be familiar with them. They are in Lacey, Washington. And we work with them to help manage our group members' claims. So the benefits of using ICM, uh, claims management is a huge part. This is what they do for a living. They know people at L&I, they know the doctors, they can help close out claims, they can help identify ways to keep a claim lower. So once a claim happens, they can really help you with the cost containment. And I'm going to show you one example in a few slides of how that claims management has helped one specific member save a lot of money the last couple of years. Other areas, loss control safety, so they can do workplace safety, go to your workplace and make sure that everything is as safe as possible. We provide videos, workplace video safety videos, a number of opportunities for you to keep your workplace as safe as possible, which will then in turn keep your premium lower. So the components and the benefits of our retro group, first, there is a fee to join, and that is 6% of your premium is the fee to participate. We usually, in most years, we will return that 6% at least to all of the members who are performing well. So any member who has a premium higher than their claims, we almost always return that 6%. And with that 6%, you're getting that claims management as well as the opportunity to receive benefits. So it's a pretty good use of that 6% that is many times returned. Again, the refunds, we've returned over $24 million, and the last 5 years, our refund has averaged 12.5%. So if you're performing well in our group, and these are all averages, I can't promise anything, but the years have averaged about a 12.5, or over the last 5 years, we've averaged about 12.5% return. Another area, and this is a little bit harder to quantify, and that is the discounts. What we see is once a member signs up with us, they're already paying they sign up with us, we've done some underwriting and we've determined that they're paying more in premium than they are in claims. What happens many times once they join the retro group is their premium goes down. And so there's some pretty significant savings just by having that premium go down. So experience rating goes down, which then your premium goes down. So those are all benefits you can get. You get the claims management, you get most likely going to get refunds on what you're paying in your premium every year. And then you also get a decreased premium along with those refunds. So kind of a double way to save money. There is risk in a retro group, and I do want to talk about that just briefly. If the retro group had a year that was the converse of what I was talking about, so instead of $500,000 claims, $1 million in premium, if your year had 1 million in premium and 2 million in claims, L&I could will penalize us. There is a penalty that could happen. There's a maximum penalty that they can give us, and we have since 1991 every year put a little bit of our refunds into a reserve account, so we are fully funded for a couple years of maximum penalties. So that's a pretty rare, I believe, from my understanding. It's a pretty unusual benefit to have. So what we're doing is we're hoping that if we ever do get that penalty, that it won't come as an additional cost to our members in that year. That it does that it comes out of the reserves that we put together. But that also is another reason why it's really important to make sure that you're part of a retro group that is diligent, watching, controlling their members and making sure that they are contributing to the refunds of our group and not potential penalties. So this is refund specific. The last 2 years of refunds, members 150, now we're up to 152. Total refund, pretty much the same, 733, 800,024. Average refund, a little bit on the lower side compared to previous years, but we did have some organizations that received 12% last year and 19% the previous year. Part of the reason that our sometimes our refunds are lower or percent is lower than other years is because of the management we're providing. Your rates go down, and when your rates go down, your premium goes down, and when the premium goes down, we have a lower refund. So you're still saving the money, it's just coming out of a different pocket. So going back to that, say we're paying $1 million in premium, $500,000 in claim. What we see sometimes is because of the claims management that we're providing, the premium total that our group is paying actually decreases. So if now we only have a total premium of 750,000 for the group and still 500,000 in claims, that refund's going to go down a little bit. So this is just one specific one example from one member that this member enrolled in 2023, and you can see they had a workers' comp rate of 1.1%. And after signing up with us, and I'm sure that a lot of this was due to the support they had from our claims management, their rate went down to 0.83, which was a savings of $16,000. And then in 25, it went down again for another savings of $11,000. So in those 2 years, they reduced their costs by $27,000 combined over those 2 years. And this is before they've even received any refunds. So, in addition to refunds, we're helping you keep your workplace safe, which everybody I'm sure would be on board with, a safe workplace, and then sometimes lower premiums and refunds. So I hope you're all just wondering, how the heck can I qualify? How can I see if I can participate in this group? First, like I said, to be part of our retro group, you do have to be a 501c3. You do have to be in Washington State. You have to be current with all your premiums. So if you owe money to the state, they're not going to allow you in. We can do the underwriting, but you do have to have an annual premium of $15,000 or higher, and we can gather that underwriting. That's not a problem. and also a minimum 2-year loss ratio of 1.0. So that basically means you need to have your loss ratio, you need to be paying higher in premium than you are in claims. And then the final, and all of that we can determine if you complete an authorization form. So we will be sending you, my colleague Janessa, probably later this afternoon, will be able to send out a copy of this letter, of this authorization form. And we'll get that to you. And if it's most of this information, your UBI number, most of this information is probably at your fingertips. You can complete this form, return it to me. We get all the data. So all the data that I talk about here, the premiums, your loss ratio, we will receive all that information from LNI. It can take anywhere between a day and 2 to 3 weeks. It really depends on what day we get it to them and what they've got on their plate. So again, to get this done by September 15th, I do recommend getting this back to us as soon as possible. If you can print it on your letterhead, that is preferred. That way we can, it'll avoid any slowdowns. Sometimes LNI will take it without the letterhead, but not always. So once we get this, we'll do the underwriting, and I always let you know one way or another if you qualify or not. So the one I do like to send well, I loved it when you qualify, but there's also many organizations that they just pay less than 15,000 in premium. And so those organizations do not qualify. If you're an organization that has a loss ratio above 1.0, we can certainly look at getting you signed up with ICM to help you get that loss ratio lower if you think that's something you could benefit from. And then we can hopefully down the road you would qualify for the retro group. So I hope, oh, sorry. There's a little bit more, I guess. What are your responsibilities? The first is once you enroll, you can enroll any quarter, but we really focus on October 1 through September 30th. You do have to stay part of the group for the entire retro year. So there's no withdrawing mid-year. And then you also do have to understand the risks and benefits and be willing to maintain a safe workplace to reduce injuries. So there are times that we do remove members. If we have a member that, they qualify, they've got great numbers, they've got a high enough premium, they've got the right loss ratio, and then something happens and their claims go up and they have higher losses, members can be can be removed from the group because of that. And it does happen. As much as we try to help them manage their claims, sometimes accidents happen. And they do have to be removed for the benefit of the whole group. And also talking about managing the group, kept on salary is mandatory for our members. And if this is something that you feel is something you would, and we can show how it saves you, not just part of being part of the retro group to do kept on salary, but also for future premiums. It is worth doing. We have programs to help you do the kept on salary. It's really beneficial for you, even if you're not part of the retro group. But if you fear that this could be an obstacle, we can certainly talk more in depth about the benefits, make sure you fully understand what this means and how it does benefit both you as an organization as well as the group in whole. So that is all I have today. It's and like I said, we will go ahead and email this to all of you sometime this afternoon, hopefully. If not this afternoon, we will get it to you tomorrow. And if you do have questions, we can certainly follow up with questions. We can schedule a phone call and answer any questions at that point. So thank you all. I hope you were able to use your free lunch, and I hope you have a great rest of the day. Thank you.